traders, and welcome to another video review. Today is Monday, March 11th, 2024. We are just started the new trading week, so let's take a look at the economic calendar for today. As you can see, I got medium and high importance data to show on the economic calendar, and one of them is the Japanese GDP that was published overnight. The GDP of Japan beats the expectations of minus 0.1% with the actual number of 0.1%, which is better than the previous reading of minus 0.7%. So we will definitely take a look later on at the Japanese yen. Some data from Turkey were planned for the release later on. Unemployment rate, retail sales data as well. Then we got the data from Switzerland, SICO consumer climate. Scheduled for this at 9 o'clock, and at 11 o'clock we got the Eurogroup meetings that starts again in Brussels. During the New York session there isn't many of the data scheduled for release, but we got the free note auction at 6 o'clock. And then we have some speeches from the German Buba, Mauderer, at 6 o'clock as well. At the end of the day, quarter to 11, we got the electronic card retail sales data from the New Zealand. So the calendar is not that busy at all. It might be a good idea to just take a look at the majors at the beginning of the trading week. So let's start with the euro dollar as usual. The most traded pair in the world is apparently consolidating in the old demand zone after the breakout towards 1.0982. So we almost hit the other supply zone. Let me just zoom into for you guys to see closer what is going on. So the supply zone has not been tested. We got this very big candle here, high volatility candle. This candle is from the March 8th, so it's a Friday candle. We got some sort of the bearish engulfing inside bars. It looks like the extremely overbought market conditions does look like the end of the movement to the upside, and now the question is whether this demand zone will now be quite important. For now, it's quite helpful because there isn't much going on over the night. 1.0931 is the high of the zone, 1.0943 is the low of the zone, so it's like a apparently 10 pip range at the beginning of the week. Nevertheless, we are trading above the 50 periods moving average, above the 100 periods moving average. We are coming off the extremely overbought market conditions, and this upside movement has been apparently extended a little bit to the upside, because we before we just thought that maybe this upside movement will be completed a little bit sooner, like here, and then we have the downtrend resumption. Nevertheless, nothing like this happened yet. We got another extension to the upside. Nevertheless, if we keep looking at this chart, we can still see the wave A, wave B consolidation, wave C to the upside. So it's still not a 5-wave movement. It's still not some sort of the impulsive wave progression. So maybe this candlestick pattern here might be the beginning of the reversal lower. So the uptrend or our correction would be terminated, and then the downtrend should resume. So that was the euro dollar. Let's find out what's going on the US dollar to Japanese yen. On a 4-hour chart, further deterioration is being observed, and the next target for the bears is located at the February 1st low at 145.91. The local low was already made at 146.50, so it's not that far away whatsoever. So after the period of the extended partial distribution, we broke below the supports, now resistances. We broke below the last support at 147.65. Now this level will become the technical resistance. We are trading below the 100, below the 50 periods moving average. Moreover, those moving averages on a 4-hour chart just cross, and this is a bearish cross. Okay, 50 is crossing the 100 from above. We got some kind of signs of dips being bought back up because of the extremely oversold market conditions. Nevertheless, it doesn't actually look that bad whatsoever. It might be a spike to the downside and then some sort of the correction to the upside towards the technical resistance. Nevertheless, it still looks very, very solid for the bears. The outlook remains bearish until we hit the and test the 145.91 technical support. That was the US dollar versus the Japanese yen. Let's go to the cable. And the cable is breaking the bank. The cable is breaking the bank, completely not in line with our scenario. There is something else cooking here on the British pound as we passed the highs of the last year highs. Yes, there you go. 28th of December 2023 was 1.2804. Now the recent high was made at 1.2892. But the market conditions are extremely overbought on the RSI. So we might see some kind of a profit taking or maybe some kind of a pullback on the British pound again. Nevertheless, this is still the movement which is being made in 3 waves. There is no 5-wave progression. So we will keep this labeling. We will still keep this labeling here. We might say there is a bearish engulfing on the top of this recent movement to the upside, so that's not a problem here. We got this bearish engulfing. We got a pin bar-ish kind of a reversal, but there is no follow through lower. There is no test of the previous high. There is no test of the last supply zone, so it looks like the overall structure is still having a lot of ground to cover. We broke above this trend line, which is again very, very interesting because we hit this trend line. We broke above it, never tested from there above. So it looks like the market might come off these extremely overbought conditions and go towards one of these levels to test them. Of course, the level of 1.0690 will now act as the technical support, and the level of 1.0709 will act as the technical support as well. What is unknown right now is the scale of the pullback, is the range of the pullback, whether the market will test the old supply zone or whether the market will test the 50 or 100 periods moving average or just the trend line. I think it's worth to keep an eye on the situation. It looks like the market wants to go lower. It looks like the bears are in charge of this market for a pullback. And last but not least, let's take a look at the recent progression of the Bitcoin. As you can see, we hit the next target for bulls, the $70,000 mark. Now we just broke above the $71,000. So the market is still moving higher. Let me just place the next target. It will be purely psychological target here for the $75,000. So this is where the next target for bull is, psychological target for the Bitcoin. All of these lines here will now be changed to the support, of course. So we got the support levels, and I think that this recent line here, the line that was made after the breakout above the level of 70, let's say, basically $70,000, now will act as the technical support as well. Let's just wait for this candle to close to see whether that is a solid candle with a big body, and there is almost no wicks from the upside or from the downside. Okay, so we still have some time for this candle to close. Let's wait for it, and then we will see what we can do with it. We got, of course, the old bearish engulfing pattern. We got all of this pin bars here down towards 59,000. Nevertheless, we just hit new all-time high on the Bitcoin, and it looks like the bulls don't want to stop. Next target, $75,000 as the uptrend continues. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.